People don't believe in a circumstance until the price action in the underlying commodity justifies that belief. And by that time, it's often too late to invest. The circumstance that would have allowed them to make a lot of money had already passed.
Okay.
When you have a commodity that is essential for the future of humankind, that is selling on global markets for less than the total cost of production, only one of two things can happen. That commodity can become unavailable over 5 years or 6 years, or the price of the commodity goes up. It was fairly clear to me that either the price of oil went up or your car wouldn't start. It's odd that so many people miss the obvious. You may not know, but I have graded for free almost 100,000 portfolios in the last 35 years. One of the things I've learned is that there is a definite mismatch between most investors' strategy and most investors' tactics. Many investors understand the thesis of resource shortages, but those resource shortages can easily take 2, 3, or 5 years to play out. And those same investors have trauma holding stock over a long weekend. If your strategies and your tactics are so badly mismatched, it's of course no surprise that people lose money.
Rick Rule has spent more than 50 years investing in natural resources, beginning his securities career in 1974 and building his reputation across mining, precious metals, and energy markets.
He founded Global Resource Investments and later served as president and CEO of Sprott U.S. Holdings, financing and investing in natural resource companies across multiple market cycles.
Over his career, he's participated in hundreds of natural resource financings. Today, through Rule Investment Media, he continues analyzing resource markets and personally reviewing investor portfolios.
Often you have circumstances where an outcome is inevitable, but the outcome isn't imminent, and people are searching for imminent, not inevitable. I've been lucky enough in the last 40 years that I try to focus on answering investment questions where the answer begins with when, not if. You can be wrong in the thesis for 6 months or 12 months or 24 months. The truth is, at least in commodity markets, money is made in 5-year time commitments, not 5-week time commitments. In the decade of the 70s, when I was a very young man, I had the extraordinary good fortune of being interested in natural resources. At the beginning of the greatest bull market that resources have seen in the history of mankind. Gold price went from $35 to $850. The oil price went from $3 to $30. I made a lot of money as a young man. And like many young testosterone-driven morons, I thought the fact that I made money had to do with the fact that I was smart rather than that I was living in an epic bull market. When the commodities boom cracked, I went from being a very wealthy and very arrogant young man to having a net worth below zero, thinking you're a genius, discovering you're a moron. Those are painful lessons. People are often very rational when they buy consumer goods and very irrational when they buy investment goods. Let's say that you were going to buy a winter coat. You knew roughly what size you want. You knew roughly what style. You knew that wool was warmer than something else. You're reasonably informed. If you were in a shopping mall and there was a gigantic sign that said all winter coats, 65% off, where are you going to go? But interestingly, when people shop for stocks as opposed to coats, the fact that it's been marked up from 20 to 30 over a year makes it more attractive. Contrarianism becomes a habit. One of my slogans when I teach is to buy hate and sell love. In other words, buy what people are bored of, or better yet, what they despise. And when that returns to favor, sell. By now, I look at the resource markets and I see a very low level of hate, which tells me that the risks are increasing.
At the start of the year, crude oil was trading around the high $50, and now it's closer to $90 to $100. And looking back, we were kind of wondering if that feels like that move was almost inevitable. And when you see something like that in hindsight, was that an obvious trade at the time?
I had expected the $90 quote to occur in 2029. Despite whatever forecasting skills I might have, I couldn't anticipate that all of us collectively would be dumb enough to go to war. Now, higher prices over time were a certainty because the global oil industry has been underinvesting in sustaining capital investments to the tune of about $1 billion per day.
Wow.
The focal point, however, for correcting that sin was, of course, a war. Had the war not occurred, I suspect that deferred sustaining capital investments over the next 2 or 3 years would have conspired to produce this price anyway, but certainly the war was a catalyst.
Okay. In your opinion, what did you see that that specifically that most people either missed or they chose to ignore?
With regards to the oil price, you mean?
Yeah.
Yeah, clearly deferred sustaining capital.
Okay.
I mean, even big financial interests looked at the oil and gas industry and wanted them to increase returns to shareholders, either by way of dividends or capital buybacks. And what has happened is that both the private and the public sector has, in effect, decapitalized the oil industry. The worst culprits, of course, are the state-controlled firms, PDVSA, Pemex,
Okay, I was going to ask
where
you.
politicians diverted the free cash flow from their oil industry to politically expedient domestic spending programs, including, ironically, subsidizing gasoline. But the private sector hasn't been blameless. There have been a lot of companies, European companies, American companies, Canadian companies, that have in effect cannibalized their oil and gas free cash flows in favor of returns of capital rather than making the sustaining capital or new project investments. The war was a catalyst, but the chickens are going to come home to roost anyway.
Okay. And one, like, talking about like why the, I guess, system broke at that point, prices were low, but the underlying system hadn't really changed. What actually caused the energy system to become so constrained?
Well, I mean, the war, clearly, you look at the headlines around the Straits of Hormuz, they will tell you correctly that 20% of world oil volumes move through there.
Yeah.
The thing that amazed me was that the press forgot to report that over 50% of the world's export volumes move through there. Obviously, American oil doesn't move through the Straits of Hormuz to America. So the idea that 20% of the world's total volume moves through there is much less important than the fact that well over 50% of the world's export volume moves through there.
Okay.
If you are in a part of the world that is dependent on oil imports, read as an example the eastern rim of the Pacific Rim, Korea, Japan, Taiwan. It's much more critical than if you're a North American consumer relying on American and Canadian crude. There was no way that the global oil industry could make up for production shortfalls of 50% of the world's export crude, particularly when you combine that with a shortfall of 30 or 40% of the world's export liquefied natural gas, the principal competitor for crude oil.
When something like oil is trading below what it costs to produce, what does that tell us about where things are likely headed?
Well, that's a great question, and we need to expand that question beyond oil.
Okay.
When you have a commodity that is essential for the future of humankind, that is selling on global markets for less than the total cost of production, only one of two things can happen. That commodity can become unavailable over 5 years or 6 years, or the price of the commodity goes up. Whatever success I've enjoyed in commodity investing since I learned that lesson, which was, by the way, 1982, is really attributable to common sense. When, as an example, the price of oil fell very quickly during the COVID crisis, fell all the way to zero, frankly, before settling out at $20. It was fairly clear to me that either the price of oil went up or your car wouldn't start, assuming you don't have a Tesla. That outcome was fairly obvious to me. It's odd that so many people miss the obvious.
Do you recall a time where nothing in the market was confirming your view, even though you were ultimately right?
Oh, in the short term, and mercifully for me, most of my competitors think in the short term. Often you have circumstances where an outcome is inevitable, but the outcome isn't imminent, and people are searching for imminent, not inevitable. I've been lucky enough in the last 40 years that I try to focus on answering investment questions where the answer begins with when, not if. You can be wrong in the thesis for 6 months or 12 months or 24 months. The truth is, at least in commodity markets, money is made in 5-year time commitments, not 5-week time commitments. And mercifully for me, I've grown up competing in a circumstance where most people either didn't know or didn't want to know that time was required to be right.
Is that, would you say that's probably one of the main signals that people focus on that end up, I guess, misleading them the most? Like you said, the amount of time.
Absolutely. You may not know, but I have graded for free almost 100,000 portfolios in the last 35 years.
I did not know
Any
that.
of
That's such a large number when you say that.
any of your listeners who want can go to my website, ruleinvestmentmedia.com, list their natural resource stocks, and I'll rank them. One of the things I've learned is that there is a definite mismatch between most investors' strategy and most investors' tactics. Many investors understand the thesis of resource shortages, but those resource shortages can easily take 2, 3, or 5 years to play out. And those same investors have trauma holding stock over a long weekend. If your strategies and your tactics are so badly mismatched, it's of course no surprise that people lose money.
Even in a move like that in oil from the $50 range to where we are now, it wasn't a straight line. Why is volatility so destructive to people, even when they're directionally right?
I think, and I'm making this up. Okay, let's get this straight. I've pondered that myself for 30 years. My suspicion is that people invest much more than they believe emotionally, according to rhetoric. They trade the headlines. When people are relying on other people's information to make their decisions, they don't have the courage of their own convictions. I believe that if most people did their own work, I believe that if most people understood, took 5 hours or 6 hours to understand the dynamics of the oil market, or spent an hour per month on every stock that they owned, reading the income statement, reading the balance sheet, that people would be much better investors. I think that the cause of people selling too soon or buying irrationally merely has to do with a lack of knowledge and hence a lack of confidence. If you have done enough work to believe that a company is worth $20 a share and the price falls to 15, the intelligent investor buys more at 15 rather than getting shaken out of the stock that they owned at 20. Most investors, however, haven't done enough work to have the level of confidence that would allow them to believe that they, rather than the market, are right.
Do you also see a disconnect between how people think long term and short term?
Most people don't want to think long term. I'm sympathetic with that. Listen, I'm 73 years of age. I don't have that much time left. My time preference would be that I were right more quickly.
Yeah, immediately, like right now.
50 years of investment has told me that that's not a realistic wish. What I want and what is often are at substantial variance. And in order to win, you have to pay attention to what is, not what you want.
Okay. How do I want to say this? At what point does price movement start shaping the story that people tell themselves?
That's a really important point. It's very odd that when people hear a thesis, a contrarian thesis, that hasn't yet been supported by price movement, they are loath to act, even though it's rational. People don't buy, as an example, the oil scarcity or uranium scarcity or copper scarcity rhetoric until the prices moved. And when the prices moved, the realization that there's a shortage is of much less use. To the extent that you think that the oil price is going to go up, as an example, is trading at $50 a barrel,
Mhm.
you have the courage to buy it when the price goes to $100 a barrel, you will have made money. If you forestall the purchase until the price has already gone up, how might you make money?
Yeah. Do you remember a time where volatility maybe made you question a position that you took?
All the time. I mean, it's a struggle.
Okay.
It's a struggle that you have to have. I mean, I can give you some dramatic examples. I wouldn't describe it as volatility, but
Okay.
more cyclicality. Early on in the late 1990s, I understood that there was an amazing impending shortage of uranium. The world was making uranium, including cost of capital and tax, for about $30 a pound, and they were selling the stuff for $10 a pound, losing $20 a pound and being dumb miners, trying to make it up on volume, and either the price of uranium had to go up or the lights had to go out. Those were our two choices. So I found a tiny little uranium stock called Paladin. At that point in time, a 2 million Australian dollar market cap. I and some investors who were close to me wrote a save the company check at 10 cents a share. This is hilarious. And I was rewarded for my brilliance by watching the stock go first to 12, but then to 11, 10, 9, 8, 7, 6, 5, 4, all the way down to a penny. If you bought something at 10 cents and it falls to a penny, you don't have a hold. You have a buy or you have a sell. Mercifully for me, I re-examined my premise. I decided I was right. I started buying again at a penny and a half. The stock went to $10. It takes real guts to face a 90% decline in price and decide that you were right and the market was wrong. When those circumstances occur, they're almost gifts from God.
If yeah, I don't know that I would have had that courage or that I possess it.
You have to do the work. You really truly have to do the work, and you have to accept that occasionally you're going to get spanked. Occasionally you're going to be wrong. I had 24 very good years investing in Russia because Russian resource companies were very cheap. The management teams were much better than people expected. I had 24 extraordinary years, and then I had one very bad year. So you have to accept that occasionally, particularly in the speculative part of your portfolio, in order to be right, you're going to have to be wrong occasionally. And you're going to have to accept the fact that you're going to be wrong occasionally.
If someone had identified a setup early, how should they think about the time between being early and being right?
It's tough to do, but I would describe that as an opportunity.
Okay.
The longer the time passes between the realization of a goal and the time that you first enter, that's called the acquisition period. Time goes on, and by definition, the time to the event becomes shorter. You need to do the work that you have the confidence. In other words, the theme has to be big enough and incontrovertible enough that you have the courage of your convictions and you deal particularly with volatility-induced weakness as an opportunity, not a risk. Having the courage to treat that circumstance as an opportunity rather than a risk is really a function of knowledge.
So would it be fair to say that, lack of knowledge, like you said, lack of courage is part of what makes that period of time so psychologically difficult to sit through or stay in, I guess, maintain?
Maybe part of it, it being the ability to weather the storm, has to do with age. My first decade as a resource investor is in the 70s. I didn't know that markets worked. I didn't know that the cure for high prices was high prices. The cure for low prices was low prices. I learned that lesson in a very painful way at the end of the 1970s resource boom. It took a decade from the time I realized it, 1980, 1981, sort of the early 1990s, before I had the discipline and the experience to really act on the knowledge By now, I guess that, obviously I'm an old guy. I'm 73 years of age. Uh,
You're rocking and rolling. You are rocking and rolling. You don't.
contrarianism becomes a habit. I now, one of my slogans when I teach is to buy hate and sell love. Uh, in other words, buy what people are bored of, or better yet, what they despise.
Mhm.
And when that returns to favor,
Then
sell.
you sell it.
By now, I survey the resource markets, and I see a very low level of hate, which tells me that the risks are increasing,
Yeah.
ironically.
Is it more useful to think in terms of when something plays out rather than if?
If you are asking yourself that kind of question, as an example, if I speculate in an exploration stock, I'm asking myself an if question. I'm buying something because I hope that they will find something, or I believe that they might find something. Note
Mhm.
those two words, hope and believe. That's speculation. If I, in a COVID-induced weakness around the oil price, buy Exxon, there's no hope involved. Either the price of oil goes up or my car doesn't start. That's a when question. When questions are much more frequently investment questions, and hope questions are much more frequently speculative questions.
Okay. You've been through many cycles before. Was there a time when you were right on the setup, but you still didn't quite benefit from it?
No,
Okay.
actually. Well, maybe, but I've probably forgotten those ones. I would say the closest to that, and it isn't actually true, the closest to that was 24 years of success in Russia,
Okay.
and then 1 year of dismal failure. I
Mm.
didn't believe that we would be stupid enough to force the Russians into war over the Ukraine, and I didn't believe that the Russians would be stupid enough to go to war in the Ukraine. Um, Turns out underestimating political stupidity is a risk in and of itself. But certainly, I was right about the setup in terms of the structural advantages that Russian companies enjoyed in natural resources. I was wrong about assuming that humankind wasn't dumb enough to go to war.
So now we've seen a move in oil play out. Why do so many people still not act, even after seeing the opportunity start to work?
I think people have what I hope is a reasonable suspicion that the current impasse in the Straits of Hormuz ends, which is to say that a ceasefire holds and peace returns. If that happens, there's a whole bunch of floating cargoes north of the Straits of Hormuz that could pass through the Straits of Hormuz and at least alleviate some of the shortage. Uh, these very high oil prices will lead in the short term to a little bit of demand destruction. And if you increase, however, temporarily the supply while you reduce the demand, it wouldn't surprise me. By the way, this is not a prediction, but it wouldn't surprise me to see the oil quote fall from, the nominal $100 level today back down to 65 or $70 a barrel. So people who hadn't expressed their preference may be waiting for peace. I don't know the answer to that. There's a
Yeah.
whole body of investors around the world who are ill disposed to invest in oil and gas because they believe in wind, solar, and the tooth fairy. They don't understand the market share that fossil fuels has and will continue to enjoy. I'm not, by the way, advocating pollution. I'm just trying to
Yeah.
say that there's a whole bunch of people who, as a consequence of their political beliefs, impose rhetoric
Mhm.
uh, rather than economics.
Yeah. Because I was thinking, like, okay, for myself, I'm like, what would hold me back? Would it be hesitation, fear of being late, something else? And then, for those of you who are in that space, that's why I just kind of wondered. I'm like, what holds people back at that point? But
I think all of the above.
mhm.
If you had interviewed me at this time a year ago, I would have said Exxon is an absolute no-brainer below 100. Above 180, I'm not sure I'd describe it as a no-brainer. The circumstance that had anticipated, I had anticipated it occurring in 2028 or 2029, occurred in 2026 as a consequence of war. So there are reasonable reasons to at least defer the acquisition of oil and gas stocks. The price event that we had anticipated has already occurred.
Do you notice a tendency for people to wait for confirmation, and then by the time they get it, the opportunity's already gone? I mean, I'm sure you do a lot, but I was just kind of wondering if that's, just
that was the mistake I tried to make earlier. People don't believe in a circumstance until the price action in the underlying commodity justifies that belief. And by that time, it's often too late to invest. Yeah. That's what I say: buy hate, sell love.
Buy hate, sell love.
It was pretty easy if you paid attention to understand the oil thesis. It was pretty easy to understand the gold thesis. It was pretty easy to understand the uranium thesis. But very few people acted on it, even though people had been informed of it, until they had price confirmation. And when they had price confirmation, the circumstance that would have allowed them to make a lot of money had already passed.
Yeah.
So if you believe that the price of gold could go from $1,500 to $5,000, and you believe that that could happen as a consequence of the deterioration of the purchasing power of the US dollar, it is just as true at $1,500 as it is at $4,500. It's just a lot less rewarding.
Yeah. I was thinking like, okay, people maybe in order to act, they're thinking or feeling like, well, I need certainty. I have to have certainty. But in a situation, in some of those situations, maybe certainty never really exists. But if you also said if you did your homework though, and you were really trying to make yourself knowledgeable, I guess that kind of answers the question. You'll get what you need to know when to act.
Yeah. Let's draw ourselves back to the beginning of the discussion where I said that if you ask yourself a question where the answer begins with when, not if,
then
it's a function of time. People don't like being early, but what people like doesn't matter. You have to familiarize yourself with what's on offer. How much risk you're willing to take. When I was a younger man, ironically, and had much less time on Earth, I was much less patient. Now that I'm an old guy with less time on Earth, I'm much more patient. It isn't that I wouldn't like to be rewarded, by Monday. It's just that I understand now that that's not on offer. If I have a high probability circumstance, very high probability that something's going to occur, but I don't know if it's going to occur in 3 years or 4 years or 5 years. I do know that it's going to occur. And I know that if it's going to occur, if I act now, I'll make a lot of money. That's a pretty good circumstance. For some reason, uncertainty around time is penalized higher than uncertainty around circumstance. That is to say, people would rather bet on a technology that may fail 100% quickly, as opposed to investing in a circumstance that will certainly play out to be true and lucrative over the 5-year time frame.
Yeah, it's kind of like I'm wondering, I'm like, well, maybe people we're talking about all these things that are making them hesitant. It's maybe feeling like they're feeling internally like I don't have the time to wait this out. But like you said, you do, and it's paid off in many instances for you. There's data that shows people that. So
it's amusing to me that people will excuse their own lack of knowledge in a subject that's popular at the time. How many people who have invested in technology stocks in the last 10 years understood anything about the technology that they were speculating in? They received positive reinforcement from the Wall Street Journal, from CNBC, from Fox, and they didn't know anything about it. They let the fact that they believed they didn't know very much about oil and gas distract them from the oil and gas business. In other words, it's easy to excuse lack of knowledge in a subject that is popular, rather than in a subject that's unpopular. I was attracted myself. Listen, I was born and grew up in Silicon Valley. I was attracted to the whole tech thesis. But I looked at myself in terms of my knowledge of various technologies and decided that I was at a competitive disadvantage with other investors that I knew who were well versed in technology. So I decided, if you will, to stay in my own little investment ghetto.
Okay.
Uh, Most of the people I've talked to, I guess, don't have an investment ghetto, which is to say they're unknowledgeable about technology. They're unknowledgeable about bonds. They're unknowledgeable about resources too. Rather than work on improving their knowledge, they seem to flit from popular topic to popular topic to popular topic, and hence, through the course of their career, never make any money.
Mm. It it almost feels like people behave more rationally when they're buying everyday things. Why do you think people are able to understand value when they're buying something like groceries, but they struggle to apply that same thinking to investments?
You make a wonderful observation. People are often very rational when they buy consumer goods and very
Mhm.
irrational
Mhm.
when they buy investment goods. And I don't know why that is. I know, like, let's say that you were going to buy a winter coat, you
Mhm.
know, and you knew roughly what size you want. You knew roughly what style. You knew that
Yeah.
wool was warmer than something else. You're
Mhm.
reasonably informed, and so
Yeah.
you go out to buy this coat. You go into a shopping mall or wherever it is that you go. Maybe you're young enough, you go to Amazon. I don't know, but let's assume you go to.
I do a little bit of it all. My husband would say I do too much of it all.
No, see, you're informed. But the truth is that you go in with some expectation of what you need and what attributes you think are important, and then you shop. If you were in a shopping mall and you looked on the left-hand side of the center sort of hall of the thing, and there was a gigantic sign that said, "All winter coats, 65% off. We will
Oh,
never be
you got
undersold."
me already. I love a deal.
And then you look on the right-hand side and it says premium merchandise, always overpriced. I mean, give me a break, right? Where are you going to go? Uh, but interestingly, when people shop for stocks as opposed to coats, the fact that it's been marked up from 20 to 30 over a year makes it more attractive. Um,
Yeah. What what if there is if you can think of a main moment or one moment, what's the moment you realized that disconnect in human behavior where you saw it and you're like, "Oh wow, we're very disconnected."
I experienced it in myself, and I guess maybe that's what you have to do. In the decade of the 70s, when I was a very young man, I had the
Mhm.
extraordinary good fortune of being interested in natural resources. At the beginning of the greatest bull market that resources have seen in the history of mankind. Gold price went from $35 to $850. The oil price went from $3 to $30. I made a lot of money as a young man. And like many young testosterone driven morons, I thought the fact that I made money had to do with the fact that I was smart rather than that I was living in an epic bull market. I became a fairly hubris ridden young man, forgetting that markets work, forgetting that the cure for high prices was high prices. When the commodities boom cracked, I went from being a very wealthy and very arrogant young man to having a net worth below zero, uh,
Wow.
but with some newfound humility. I learned that markets work. When I reviewed the cause of my success in the 1970s, it had nothing to do with me whatsoever. It had to do with being in the right place at the right time, accidentally. Uh, in retrospect, although it was extremely painful at the time, thinking you're a genius, discovering you're a moron, um, going from being very wealthy and very respected to having a net worth south of zero and not even respecting yourself. Those are painful lessons, but the truth is, mercifully, that lesson happened early in my career, and mercifully, I was self-honest enough to learn the lesson. The consequence of that is that the period I don't know, 86, 1987 till today has been fairly pleasant.
It's interesting sometimes how and when life will kind of throw us a big old slice of humble pie, and it looks different for all of us, but um it's it's important and it's inspiring that what you said, like you learned from it and you turned it back around. You didn't let that be the end of your story. So I think that's pretty awesome.
Well, thank you. As I say, in retrospect, it was useful that it happened early in my career. I wish the lesson would have been a little bit less dramatic,
Yeah.
but it doesn't matter. The truth is, what happened happened, and the fact that it was dramatic was probably fitting punishment for how easy it was for me in the 70s and how stupid I was in not recognizing what was going on.
For the folks who are going to be watching this, and it's okay. So for someone, they're watching this and maybe they've seen an opportunity to capitalize, but they didn't act on it. How can they get in the right frame of mind to take advantage of that next opportunity?
Read. Your first investment, particularly folks your age, is in themselves, in their knowledge. Mm-hmm. There's a whole bunch of things to be afraid of in the world. You can be afraid of, politicians, which is a rational fear. You can be afraid of all kinds of things. The biggest risk you're going to run as an investor is located to the left of your right ear and to the right of your left ear. And if you prepare your mind and you do the work and you allow your mind to help you conquer your emotion, you're going to make a lot of money. Young people, I think, should begin the journey by reading a book called Economics in One Lesson by Hazlitt. It teaches you the way the world is, as opposed to the way that, Fox or CNBC, or for that matter, government wishes it were. So start by getting a preliminary understanding of the way the world works. Then read another book, The Intelligent Investor by Ben Graham.
The Intelligent Investor.
The best investment book ever written relative to the effort required to read it, which is low. It is important that you don't just buy the book. You have to read it. And then having read it, you have to employ the lessons, which are unpleasant lessons. And if you get through that book easily and you actually want to get rich, not everybody does, but if you do, then you read a third book called Securities Analysis, also by Ben Graham. If you read Securities Analysis and if you employ the lessons, over time, you will get rich. That's a simple declarative statement, but it's harder to do than you might believe. You won't be allowed to chase fads. You will be required to save 10% of your income pre-tax. You want a new pair of shoes? Tough.
Yeah.
You don't get to buy it until you save some. So if people really, really, really want to be successful investors, they can do it, but they have to invest in themselves first.
Yeah. Yeah. And I was like, when you learned that, okay, I have to really, really, really invest in myself, would you say that came after you lost everything and you rebuilt everything? Or do you feel like you learned through enough mistakes before the loss? I was just kind of wondering what your mindset was on that.
I was a good worker in my 20s. I was just learning the wrong lessons. Okay. I learned a lot of the fundamentals of natural resource investing, particularly the speculative part, exploration. The problem was my premise was wrong. So it took, I think for me at least, all of the books that told me that I was making a mistake, I had read. But I allowed my investment performance and frankly, my hubris to override the knowledge. Had I paid attention to the lessons in The Intelligent Investor, which I had read, if I had paid attention, I would have not failed as dismally as I did. In other words, the truth was already in my hands. I just hadn't allowed it to come into my head yet.
Okay. Would you say that that's after 40 years of doing this across multiple cycles, is coming to that realization? Would you say perhaps that shaped you the most as an investor?
Yeah, I think so. And I'm not sure that all of my success is transferable. I enjoy the process. And while I didn't grow up poor, I did grow up in a house, headed by a single mother, where sometimes we ran out of money before we ran out a month.
Mm,
And I didn't want a circumstance in my life where I was ever constrained by that.
mhm,
There are other people whose motivations are different, uh, whose willingness to work is different,
mhm.
that kind of thing. I was lucky that even during the period of time when I was consigned to failure, I was already a good student and I was already a hard worker,
Mhm.
which, I mean, served me well then.
Yeah.
As I say,
Mhm.
my failing was all my fault. It wasn't the market's fault or anybody else's fault. And frankly, I was already armed with the knowledge to have dodged that failure. But that was mine. Now, what happened afterwards, that is to say, whatever success I've enjoyed, whatever success I've been able to teach others, is a consequence of continuing to work
Yeah.
and continuing to study.
You could, I mean, you could retire your whole family tree. What about resource investing makes it so compelling for you to continue speculating?
It's fun.
Yeah.
I mean, for one thing, I mean, maybe it's a habit by now. I think one of the things that keeps me starting businesses or investing in small businesses
Mhm.
is that because of reputation, because of capital, because of know-how, opportunities pop up for me repeatedly now that I would have killed for when I was a kid.
Mhm.
And when I see the opportunities that were scarce when I was young,
Yeah.
I just can't help but jump. Uh, my wife would tell you too that my mind needs to be stimulated or sedated, and both of us decide that working is healthier for me than drinking. So, you know, part of it, part of it is self-defense. The third is I have a very real sense uh, that I need to teach.
Okay.
I had the good fortune as a young man of being very well mentored,
Mhm.
very, very well mentored. I wonder to this day why people were so generous with their time and knowledge when I was a young guy.
Mhm.
And if I don't uh, do the same myself, it feels to me like I personally dishonor the debt that I owe to the wonderful people who mentored me. People ask me why I do Rule Investment Media, which, you I mean, other of my education businesses make money, but that one doesn't make any money. It's really a function of an extraordinary debt I feel
Mhm.
to the people who mentored me when I was younger.
Yeah. Well, I mean, I'm from what I'm getting as I'm speaking to you, it's your way of giving back and contributing to the future, the next generation, those who have a curiosity and a desire to learn and work as you did. And I think I think it's special because not everybody does that. I mean, some people, obviously if you ask them or you seek them out, they'll answer, they'll help you, they'll give you a little time, but you're making it a point to make sure you put information out there and make it available and accessible to people. And I think that's pretty awesome.
Well, thank you for that. But, my mentors, many of them, did the same thing. And there are others of my age. I'm thinking Pierre Lassonde as an example, who are equally determined
Hmm.
to teach the lessons that they learned. And
Yeah.
it's interesting when I talk to them for exactly the same reason. I mean, yes, it makes you feel good at the time to do it.
Hmm.
Uh, and it also is exhilarating to see a young person ascending the learning curve rapidly. It just feels good.
Yeah.
But for me, there's also this sense that I have a mortgage, uh, that I have an obligation to those people who taught me
Hmm.
to turn teach.
Yeah. Well, Rick, it has been amazing getting the opportunity to talk to you. I'm very appreciative. I wanted to thank you for your time. Our entire team is very appreciative. They were so excited, when you agreed to speak with us. And we want to make sure that we let the audience and the viewers know where they can find you and how they can stay connected with you.
Uh, the easiest and cheapest way to find me is at my website, Rule Investment Media, because I give you an incentive to do that. If you care what I have to say about natural resource investing, go there, List your natural resource stocks, and I personally will rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comments might have value.
Yeah.
For the record, please, 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 no tech stocks, no crypto. Keep an old man to what he does. Failing that, any of your listeners who are American or Canadian who are unhappy with their current bank, that probably means all of your listeners, should check out my bank, Battle Bank. Go to battlebank.com. Join the battle for better banking. Things like getting paid interest on your checking. If you're interested in interest as a depositor, you oughta. There's $3 trillion on deposit in the United States in banks where people don't get paid interest. This is felony stupid. So do your personal balance sheet a favor. Check out Battle Bank, battlebank.com.
All right. Well, if you want to also if there's anything else you think you want to send to Adam, or, something you specifically want in the show notes or anything like that, they are more than happy to accommodate, and will absolutely make sure they get anything in there that you send them. So
I just love it if the folks listening to this, particularly young folks, began by reading economics in one lesson, and by reading securities analysis. If you read those two and you pay attention to them, I mean, don't just put them by the bedstand, incorporate them in the way you live your life. The material part of your life, and I'm not suggesting that your whole life is material, but the material part of your life will be much, much, much better.
Okay. Yeah, I jotted down some notes and stuff, and so I'm excited. And like I said, I've appreciated learning from you. It's not something that I'm well versed in, but I like to learn. And this platform that I've been given through this company is incredible because I get to chat with people like you. So I'm very thankful.
Well, I'd like to thank you too. It's wonderful to see all of this alternative media out there. As my friend Doug Casey says, 10,000 points of light that aren't muzzle flashes. People who conspire to teach, I think, are the way forward for the world.